please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The Asian markets are trading higher this Monday morning. The Japanese markets gained over 1%.
For both Bhushan Steel and Bhushan Power, and Tata Steel has emerged as the front runner, outbidding its rival JSW Steel.
Borrowed amount would be not would not be more than between 30 to 35,000 crore.
Today, I think Friday's low of 10,434 on the Nifty and 25,100 on Bank Nifty are crucial.
It is red by about -2, -3 as I speak.
All those other banks, in whose names the LOUs had gone, all of them are under investigation.
Today itself, we were already down 260. Okay. You should be down 400 by the end of the day, 400 plus.
Overall global economy is only looking better in practically all parts of the world.
These assets, we have been interested right from the beginning because they're in the eastern region, and we believe that there's a lot of synergy we can get out of these assets.
If you look at the portfolio composition, you would find that a decline has been not less than 20% in most portfolios in the last month and a half or so.
We're down 117, 118 points, and it's essentially all flowing from banks.
Okay, and as we speak, we are now once again at the low point of the day. It's been that kind of a day. Today is not even seen intraday recoveries. Earlier, at least intraday rallies were being sold into. Today, you haven't even seen intraday rally. That's been the other part of trade today. This is Closing Bell. I'm Anuj, with me Surabhi. Hi Surabhi, good afternoon.
Good afternoon, Anuj. Unless you managed to go short last week and you carried those shorts, I don't know. I mean, if anybody would like the way this Monday has played out. We're what, about 30, 35 points away from the Feb 6th, the original intraday low, right? Yes. And Anuj, I wanted your view on this because I was looking at the nature of stocks that are falling. It's gone well beyond PSU banks now. Yes. It's mid caps, it's stocks like Tata Global, all kinds of names are down today.
Yeah, PSU banks probably was a trigger and they actually don't count for much in the index. So obviously, selling is indiscriminate right now, Surabhi. As we discussed on Friday as well, we went through a period where rallies were sold into. Now we're going through a stage where consolidations are being sold into as well. Today hasn't been even one bit of rally, not even one pullback. Friday's low was breached in first hour itself. That was an indication that the trend day was there. Then you had classical counter trend consolidation between 1 to 130. That was sold into, and now a lot of stocks are falling. As you pointed out, it's not banks any longer. HDFC Bank actually is in green, and that's helping Bank Nifty, but others clearly are down quite a bit. Even IT is beginning to sell off. This is not to say that we have seen any kind of a start of a bear market in India because we are underperforming other markets. It's just that we have had a trigger, and because of that, the market is seeing its first correction of the bull market. You'll recall in the last bull market, we had so many instances of 10%, 20%, 25% correction. And right now we've fallen about 8% from the highs. So these things happen. And when they, the beauty about equity markets is when they go up, you think that nothing can go wrong. And when they start to fall, everyone panics. And that's what's happening right now.
Absolutely. I take your point about IT completely. I mean, you should pull up stocks like NIIT Tech, L&T Tech. These were the big stars of the Q3 earnings season, the kind of buying these stocks were seeing. But even that is getting undone today. Take a look at that stock. 9% down on NIIT Tech. If you pull out a one-year chart, you'll see the bulk of that gain coming in towards the end after what was a very solid performance in the third quarter. So there's correction coming in even on those mighty stocks.
Before we invite our technical guests for closing strategies, the market right now is at the low point. Good time to invite Sanjay Da, Director of Quantum Securities, who now joins us on the phone line. Sanjay, good afternoon. So, a lot of people thought a correction was due. It is here. But your thoughts on the magnitude of the correction and the specific reason or the trigger for that correction, the PSU, the PNB scam, I mean, the last bit of correction at least. Your thoughts on where we are right now?
I think it was much expected, the correction, and one just needed to attribute some reason to it. So it turned out to be, of course, this unfortunate event, the PNB fraud that we are all dealing with and, handling our portfolios. But at the same time, we need to keep in perspective, what the reality on ground is. We just can't, just because we're seeing the Nifty at closer to 10,200 and we start talking about going down to 9,800 or going to see bank stocks at two-digit figures of what they were in 2003 or 2004. I don't think things are that, dreadful or that bad as yet, or they won't be at that bad. Corrective action is being put in place. Obviously, this kind of a situation, fraud, and we must remember specifically on fraud, this has happened the world over. It's not new to India, what we've seen in the case of PNB. We've seen the SocGen matter earlier where we had, a fraud done by a trader there, which is the magnitude of a few $1 billion. So I think this is something that happens world over. It's not something that's unique to India that we are dealing with it. And along with this, of course, the rest of the market has corrected. Market was a little frothy at the higher levels. And I think probably today we might land up making a double bottom. If not, it doesn't matter. You need to start looking at individual stocks where you think there was potential. Nothing has changed when you were bullish at 11,000, and nothing has changed when you're getting them 30% lower. So therefore, you should actually be buying them and sitting quietly as investment and not really getting impacted by our weekly news or whatever that's going on.
That's interesting, Sanjay. You're saying that maybe, just maybe, the market is making a double bottom today. That would give a huge sigh of relief to the bulls. So you're saying that barring this fraud, I mean, it's been a series of, bad news flow triggers, so to speak, since February started. There was LTCG tax and there was a global sort of, bond yield tantrum and then this fraud. So you're saying that, beyond some of these headlines, you don't see too many negatives in the near term?
In fact, I see more positives now because prices have corrected. The stocks that you like for the next 2 to 3 years are available much cheaper. And more important, we are missing a very important point, and that's again linked to the banking sector, is the near resolution, or in fact, more or less resolution of the biggest steel NPA that we had. People are missing the good news from there. Look what's happened in the Bhushan Steel, where what provisions the banks have made and what are they getting. So I think we need to focus on everything in a balanced manner, and more so, forget the indices, forget that we're down 1,000, 1,200 points from the highs in the Nifty. Just go down and look at your stocks. If you are convinced at 11,000, there are good stories for 2 to 3 years. There's no reason why your conviction should not remain the same when they're available 20 or 30% cheaper. You may not have the cash to buy them, but just sit quietly and ride this over.
That's an interesting point you made, Sanjay, especially on the banks. So how to approach them? This morning, of course, the market has chosen to still react to the negative side of the story and not really maybe latching on to the fact that, Bhushan Steel getting resolved and at a much higher, price or, much lower haircut than what the market had priced in, what the banks would have priced in. So in that sense, would you be brave to even buy PSU banks as well? Or do you think this is not a time to buy PSU banks, but there are other stories which have also corrected in line with the market?
No, let me take the bull by the horn in this case. Let me address PNB itself, which is the one which is impacted the most. PNB has basically got 6,36,000 odd crores of deposits, 4,33,000 odd crores of advances. Has an NIM of approximately 2.5%, 2.75%, somewhere said 2.6%. 7,000 odd branches, right? You're sitting on a deposit base of 6.5 lakh crores, advances of 4.5 lakh crores with an NIM about 2.5 to 2.7%. NPAs provided as per RBI regulations. In fact, a lot of NPAs will now start getting solved. Of course, you'll throw back at these things like we don't know the extent of the LCs, LOUs, and the non-fund-based facilities. Some scam is there, but of course that scam can be endless. If you're wanting to put a figure of 20,000 crores, why don't I put 50,000 crores? Leave that aside. The bank has 7,000 branches, and today we are looking at the bank with a market cap of 27,000 crores and monetizable assets over the next 2 to 3 months of 10,000 crores. It includes the assets, which is already the bank has said, real estate of 5,000 crores, its stake in subsidiaries like PNB Housing, etc. Does it make any sense that you're getting the bank at a core value of 15 or 16,000 crores, and you're panicking that it will go down to 2 digits? Why 2 digits? Then why can't it go down to a single digit? if you really want to panic and say that look, everything's come to an end.
No, Sanjay, that's
so that applies to all PSU banks.
Yes, that is one view. No, Sanjay, that of course is one view, and that is a view which is based on someone's opinion. In your view, you think PNB can be bought right now? If yes, do you see it going back to 200?
100%. I have no doubt about it.
Okay.
Yes, and I'm not saying that this is the bottom. I can never pick the bottom. Neither can I ever pick the top in any stock. So in my opinion, I may buy it down at 115, 140, whatever the price is. It may go down to 100 rupees, but at least I'm reasonably confident with all the numbers realistically that I'm looking at in front of me. Which some of them I just spelled out very clearly, and I took on PNB intentionally because that's the one which is causing all the crisis for everyone at PSU banks. So therefore, if they go to 100, doesn't matter. But I'm reasonably confident with a 50,000 crores net worth, 10 or 15,000 crores adjusted also for all this, right? And you're getting the bank at a core value of 16,000 crores. So why wouldn't I buy it? I will buy it, and I will see it in the next 12 to 18 months, again, closer to its book value, which will be 50,000 crores, 45,000 crores, even if you adjust it, 40,000 crores.
Okay.
So therefore, the risk reward is favorable for me.
Looks like the market is hearing you, Sanjay, because we are having a bit of a bounce for now.
Absolutely, very interesting viewpoint, Sanjay, there, and it's good to have that kind of a view, because it's very easy to lose sight of context in a market like this.
Sorry for interrupting. We can keep talking negative endlessly, and same time when it becomes 11,000, we keep talking positive endlessly. So neither am I giving a bull case or a bear case. I'm only saying, realistically, please, every investor and everyone who's got a portfolio or in the market should start looking at numbers and see each of his shares. Like I explained, PNB. And I'm actually talking to a retail investor at this point of time, and I'm not talking to savvy investors because they obviously know this. But please look at every stock in this manner and do your assessment. You're holding it for 1 year, 2 years, 3 years. What is your holding period? What are the fundamentals? And don't panic and don't go by what you read in the papers or what all of us analysts continuously feed you 24/7. Do a little bit of homework yourself.
Okay, Sanjay. Thanks a lot, and thanks a lot for sticking your neck out, and being bullish at this point. With the perfect knowledge that this could go against you. But thanks a lot for the time today. So that's Sanjay saying that look, he would want to buy this market if he was buying at 11,000. There's no reason for you to not buy 10,350. And in fact, he would go on to say that he would even buy PNB at these levels. That's market for you, of course. But last hour is coming up. We have Ashwini and Mitesh now joining us for closing strategies. Good afternoon. Ashwini, your thoughts first. From the low point, there's a minor recovery. What about the last hour move, and what would be stock calls?
Well, for the moment, I think after yesterday's sell-off plus today's sell-off all morning, I think there is a bit of intraday exhaustion which happened between say 2 and 2:30. So my sense is that the market is now positioning for a bit of a short covering rally. What that will mean is that this one side consensus trade on the downside may get broken for a bit. So on the Nifty, maybe you can get up to 10,000, 400, 450. If not today, maybe tomorrow. And on the Bank Nifty particularly, 2 strong days of downside, and now private banks, there is some amount of short covering, SBI, ICICI Bank. So maybe, you could get back closer to say 25, 150, 200. So that sort of short covering can happen given 2 days worth of decline. So 50% type retracement can happen. So the last hour, people should cover their shorts if they are short from yesterday or today morning. And maybe there could be a bit more short covering as we go into the close.
Take your point, Ashwini. That's exactly what seems to be happening right now, because there's a recovery, and a lot of PSU banks actually are now managing to trend slightly on the higher side. But let's also get trading ideas. Beyond perhaps covering shorts in some of these banks, specific trades for the last hour.
See, PSUs, other than PSU banks, also are kind of facing a sell-off. So NMDC is a sell with a stop of 131. Target of 120. REC is a sell with a stop of 142, target of 130. And JN Irrigation is a sell with a stop of 119, target of 107. Allow me to come in on that double-digit problem of the PSU bank. JP Associate was at 250. When a bear market started, it came to 15, 17 bucks. So don't mess with a bear market. PSU banks are in a serious bear market, and while fundamentalists would like to catch falling knives, I don't think it is the greatest investing or trading strategy.
Okay. I think, Ashwini, it would only be fair if we get both, you and Sanjay for that discussion. So we'll do that, of course, for now.
That's what makes a beautiful market, right? We have two opposing views, a bull and a bear.
So, yes, definitely. And, we would, give platform to both the participants to make their views. Mitesh, good afternoon. Your thoughts on the day so far and your closing strategies?
Yeah, I think we talked about, shorting once the Nifty breaks 10,400 and the Bank Nifty breaks 25,050. I think both these trades have been taken, and I am not really worried about this part bounce back which is happening towards the end. I think the Bank Nifty, now needs to get past 25,100, 150 zones for signaling at least some kind of an intraday reversal. Till that happens, I think I would not be really worried, and then maybe you would want to cover your short position and then see how it goes. For the time being, we're trading with a negative bias. I have two sell calls. Asian Paints is a sell. Keep a stop at 1137. Look for targets of 1080. And Equitas is a sell as well. Keep a stop just above 145 and look for targets of 135.
Okay, by the way, just see the intraday chart of Axis Bank. And you're wondering what's happening with the Bank Nifty, because that's moved off the low point of the day, and this is entirely on account of this big rally that you're seeing in Axis right now. From 2 p.m., I think the low was about 525 thereabout. From there till now, as you can see, that there's a bit of a vertical move which is happening in Axis right now. So interesting. SP Tulsian of sptulsian.com and Mayuresh Joshi of Angel now join us. Good afternoon. Mr. Tulsian, your thoughts first on PSU banks. Of course, ever since that PNB scam sort of broke out, we have seen this huge derating. Would you want to buy anything at current price, or would you just want to stay clear and take a call later now?
See, two things. One which we have to take while taking a call on PSU banks, divide them in two parts. Take a call on the larger ones, maybe like SBI, PNB, Canara Bank, Bank of Baroda, and Bank of, I won't include Bank of India in that, but probably in this four. Because the NCLT resolution or maybe the NPA resolution seem to be, catching from here on. Taking first, I'm taking the positive, because we have talked a lot many negatives, which we have been hearing, So if you take a call on the NCLT resolution, probably that process will start. I won't be surprised to see at least 4 cases getting, coming at an advanced stage. I don't think that the buyers will get identified and deal will consummated by 31st March. But at least the things will be clear on table by 31st March, which will definitely be seeing the reversal of the provisions having already made by these larger banks. Now come on the smaller banks, maybe like UCO Bank, United Commercial Bank, IOB, Dena, Allahabad Bank, Andhra Bank. You don't expect them to revive, because it is otherwise also seem to be a free fall. Sometimes, when you see their quarterly performances, bottom line in red, provisions increasing, net in gross, the asset quality is seen moving up. So there is no point in taking a call on those banks unless until they get consolidated with some other ones. But yes, if you take a positive, because you cannot keep on screaming on the PNB alone for taking a negative call en bloc on all the PSU banks. Now today we have been hearing about this Nirav Modi case also, that about of that about 12,000 crore, 6,000 crore have all been confiscated. Even there on the street, people are talking that the diamonds which have all been confiscated are all just stones and will not fetch any value. So probably that may again be an extreme pessimist view being taken by the street on the bank. I think that by and large it is difficult to catch the bottom. Maybe for PNB, the entry level or the level at which it should settle down could be anywhere between, whether you call it 100, 105, 110, doesn't make any difference. But the range can be taken at 100 to 110. So taking all this into consideration, if I though as a willingly I won't be going and buying PSU Bank even now. Let's take that call, because this is a serious lapses having happened on the part of the Reserve Bank of India. And in fact, I will play on the older regime, like Raghuram Rajan kind of people, those who have been instrumental for not keeping, but they have all, always remain, allowed to remain in media, but having no control on the systemic issues and all sort of things. But leave aside those things because the governor comes and go, and no one has those kind of responsibility. Even they are no way superior or, comparable with the politicians as well. So coming on the PSU banks, I won't be taking a suo moto call on buying the stocks. But yes, if someone is brave enough or he wants to have some kind of PSU banks also in their portfolio, no harm in having that. So my only recommendation that probably I will only confine maybe in 3 or 4 stocks like SBI, PNB, Bank of Baroda and Canara Bank.
Okay, all right, Mr. Tulsian, thanks for that view. We also have Mayuresh Joshi joining us in the conversation right now. And as I toss the question to Mayuresh, let's just pull up PC Jeweler, because while we were talking about some semblance of stability in the rest of the market, PC Jeweler is on a weak footing. It's down another 8-9%, pretty much close to the lows of the day. Mayuresh, these days it's funny, what's the link between diamonds and steel? Typically a banker, right? So let me ask you about PC Jeweler first. I mean, any views on the stock here? It's also gone through its own motions.
Absolutely, Surbhi. And I think anything that goes by, I think PC Jewelers does get thrashed. So largely, again, I think what we're probably looking at this point of time is to probably just wait and watch, see what the developments are happening over the next few days and weeks. As Mr. Tulsian was pointing out, again, I think there has been over-pessimism as far as a fair bit of larger PSU banks are concerned. But again, I think the contagion risk is something that the markets are a little bit apprehensive about, specifically at what has happened with the Nirav Modi case and what probably happens with the diamond trade in general, and whether any extended letters or lines of credit get extended or they don't get extended, and what probably happens to their inventory and so on and so forth. So at this point of time, I think we're very, very selective again, waiting and watching. But yes, I think the top tier PSU banks, say for example, State Bank of India, there might be issues in the banking system. Probably I think the government writing to RBI might do a lot of audits as far as these banks are concerned, whether forensic audits, supervisory audits. But largely I think State Bank is something on declines that we'll continue to prefer within the PSU universe.
Okay.
So the story from the street is that there is some semblance of recovery on a couple of PSU banks. SBI leading that charge. Axis Bank has had a decent swing from the lows of the day. Good time to get some more trading ideas in. Sandeep Wagle is joining in. Good afternoon, Sandeep. What's on your list today?
Afternoon, Surbhi. I would go with the sell in the Sriram Transport Finance only if it breaks 1270. It has bounced back from the current level, so I would wait for 1270 to be broken. 1277 stop loss, 1230 target, and a sell in Adani Ports, stop loss of 396, target 381.
All right, Sandeep. Thanks a lot for those trading ideas. Let's now go back to the big story. Bhushan Steel is locked in upper circuit after Tata Steel emerged as the top bidder for the company's assets. The street, however, remains divided on the transaction. We've been getting you voices through the day, but to take the discussion further, we have with us Sandeep Parekh, founder of FinSec Law Advisors, Anil Singhvi, chairman of Icon Investment Advisor, and of course Tulsian, who has been tracking this story for long and has been bullish on Bhushan Steel. Gentlemen, good afternoon. Mr. Singhvi, first, your thoughts. Do you think the equity shareholders should get something out of this deal? That's what the market is telling us, because otherwise the stock should not have been 20% higher today.
Definitely. I look at it, the minority shareholders, and particularly in the listed company space on that, they are as much capital providers as any other lender to the company. So to treat them at par with promoter may be a very, very harsh treatment. And according to me, the capital markets over a period of time have come to a stage where you are seeing equity participation by the man on the street. So if we have this whole situation panning out, that all the equity is to be completely written off before a recapitalization takes place by the new bidder, will be a very, very harsh, and I think it will be very ironical for the Indian capital market.
So let me also bring in Sandeep Parekh into the conversation. Sandeep, what I think everybody is now trying to also understand exactly is the next steps in the process. So do we see, as a resolution plan is sort of, put in place, are we going to see a write-down of equity? Will there be a reduction in the current equity base of a company like Bhushan Steel? What is the next step?
So see, the logical sequitur is that the entire equity gets written off, and there's no real distinction, as Mr. Singhvi was saying, that there should be. But you know, in law and first principles, in corporate history, it's usually equity is completely written off, and the debt holders come in, or the new basically the person who comes in with new equity gets all the equity, and in this case, I believe they're sharing part of that equity with the lenders. So, I mean, typically, I mean, it makes no sense for the existing shareholders, unless there's of course fraud, in which case promoters deserve to go and the minority shareholders need to be protected. But the whole concept of equity shareholders is that if there's downside, I mean, their downside is protected. They don't need to sell their houses. But at the same time, with the limited liability, they also have the risk of losing their money. So that's exactly what has happened in this case. So I really don't see why the stock price is moving up. But maybe they'll get some kind of kicker out of this whole process in which they get a little bit of equity.
No, you know, Sandeep, actually, let me come in on there. The rationale being, obviously, and we'll get Mr. Tulsian's view in just a moment on this as well, as he's been explaining, the rationale being that it's a good underlying asset. The new promoter that's coming in, I mean, it will be the market's perception that it's a promoter with a high pedigree. So therefore, the market is going to ascribe a value. And if the market has faith, then the share price should move higher. But you were saying before that, that faith is exhibited by the street. Should we be prepared for a period of a low price, maybe, I don't know, 1 rupee share value? And what happens? Could there be a period when the share stops trading? Because I believe SEBI permissions are going to be required. How will the equity structure look? Because in Bhushan's case, what we understand is 12% of the equity, the final equity structure, 12% of that will go to the bankers. That's part of the deal.
Yes, exactly that. You know, the process is typically that the entire existing equity gets wiped out and the lenders come in. Now, the lenders kind of, in a way, share their equity, the new equity, with the whichever is the white knight in this case. Let's assume Tata's come in as the white knight. They get 100% of the equity, out of which 12% or whatever or they offer to the lenders, which becomes their upside. So the lenders take a haircut on the debt. And they get an upside on the equity, which is limited to 12%. So I think that's fair, and that's how it should work. But as you correctly pointed out, you know, the existing equity would come down to some nominal number before this entire process takes place. There's no on the second question, you know, there's no real clarity on whether trading is going to be halted. In fact, we have represented to SEBI that it should not. Let's see how SEBI takes it. In terms of trading halt for that period.
Okay. Mr. Sen, for those who have joined late, of course, you have been maintaining a positive stance on Bhushan Steel, but to take forward the point that Sandeep mentioned, and of course, Mr. Singhvi talking about that equity shareholders should also, you know, also get some value, and you know, this should also be treated as capital given to a company. But you know, Sandeep is making a point that normally in these cases, equity is written down to zero. So for those holding Bhushan Steel shares right now, you know, what's the way forward now?
Take my positive view here in discussion, because we are taking the legal stand on that, and let me take the legal stand here. Firstly, let me tell you that equity is a pari passu instrument, and whether it belongs to the promoters or it belongs to the public, both have the same rights. But why promoter gets shrunk? Because promoters have pledged their shares in favor of the lender. In fact, in the morning I have clarified that. Take the case of specifically for Bhushan Steel. Promoters are holding 60% of stake with them. 70% of that is pledged. I presume that it must be more, you know, but you take the whatever disclosure which they have made to the stock exchanges, about 71-72%. So that means effectively for and the process of invocation by the lenders of the promoter shares held in the Bhushan Steel have already started. In fact, we have seen yesterday 1 or 2 lenders having initiated that notice. So I am presuming that 42%, effectively 42% stake will flow to the lenders going forward. So that means, and number 2, if you take a view of liquidation, then what Sandeep has said is will hold correct, that yes, equity will have a zero value. But in fact, let me be very categorical well, and let me be very blunt, the kind of air which has been created that equity has a zero value, in which channel has also played a very important role in highlighting the same thing, one-sided, that equity has a zero value, doesn't apply here, number one. Number two, take the case of whatever we have gathered from the public informations. Tatas have offered 35,000 crore upfront as a this one, whatever it is, at plus 12.7% stake. In the morning, I have said that any promoter who will be, any potential acquirer who will be coming in acquiring this company, we eventually will be having 75% stake, which is permitted by the SEBI. SEBI have relaxed lot many things in respect to open offer, in respect to issue price. They can issue the shares to themselves at maybe at 2 rupees, maybe at 20 rupees, maybe at 100 rupees. So in any of this kind of resolution process, the new acquirer will be having 75% stake. That means there will be 300% dilution in the equity of any company. Now, if I take the case of Bhushan Steel, 45 crore equity will rise to about 180 crore, of which 135 crore equity will be held by the Tatas. And if you take 42% of 45 crore, that will come down by about maybe 75%, effectively to 11 to 12%. So here, two proposals have come here where JSW wanted lenders to forego their entire equity, while on the other hand, Tatas have allowed them to continue with their 12 and 13% stake. And probably lenders will take a call that if we remain invested in the company with eventual stake of 13%, probably the value can rise to about 1,000 crore to 5,000 crore over a period of time, maybe in next couple of years once the Tatas comes in, because everybody knows that this is a pricey asset. So this is the whole situation which we need to understand and take a call accordingly. You just can't say that and come on any law, show me in any law where without the consent, or NCLT have not been given the power under IBC also where they can direct the public shareholder. You can always invoke the pledge shares. Nowhere show me in which law, whether it is in Companies Act or whether it is in IBC code, where it has been allowed that en bloc equity, existing en bloc equity can get written off on the company getting acquired. Now come on the existence of this company. Bhushan Steel will continue to exist as a company under the new promoter. If we are talking of Bhushan Steel, then Tata's in this case, even government has clarified in respect to the carry forward of losses that yes, the MET applicability will not happen if the carry forward losses and depreciation both are taken together, which is now allowed whichever is lower. So I don't understand why this all confusion exists in respect to the equity getting written off. There have been some kind of vested interest news having initiated. I'll be very blunt and saying that Sajjan Jindal rather have taken a lead in saying that it should get suspended, trading should not happen, they should get written off and all that. Sure. But because they have a vested interest, because they want to bid for the companies at a very low price, and this is what is happening. But I'm taking a legal stand. I'm not taking my position or my positive view on the stock. That's a different case. That's taking an investment call on a stock. But I'm just trying to clarify the legal positions on Bhushan Steel as it persists, which I have at least understood in my view.
Okay, right, Mr. Tulsi, and get that point. Of course, anyway, I mean, it has been clarified. SEBI also clarified that during the process, listing is, the trading of securities will continue, and Sandeep made that point that there's still a representation that even during the final stages of resolution, the shares should be allowed to trade. But Mr. Singhvi, let me come to you. I mean, what is it that you would like to see as we take the next steps in the resolution process? I mean, when we discussed this earlier, you were also, making the point about perhaps having a differential treatment with respect to equity held by minority shareholders and the equity that the erstwhile promoter was holding.
Surely my views are as follows. First of all, this is not liquidation. We are talking about a resolution plan. To my mind, this is no different than the earlier set of things where bankers used to sit with the new promoter or the person who's going to change the way the working of the company is. Because today, let's understand, the banks have a problem with the promoter. The banks don't have a problem with the asset. In fact, I have seen in past the situation of BFR when Ambuja acquired Modi Cement from BFR. So I don't think today IBC code is any different than what BFR was meant to be. Maybe BFR was not that functional or could not get into resolution. But coming back to the situation currently we are engaged with, it's a resolution plan. It's not a liquidation. So I don't think that equity value necessarily has to come down to zero. Secondly, you have to move to NCLT. I don't think IBC Act provides for it that whenever there is a resolution plan, the equity value will come down to zero. I think it's a completely stupid way to think that equity value will come down to zero. What is going to be the holding of the new promoter? And I come back to the same point. that you cannot treat the minority shareholders at par with the promoter. Promoter has pledged his shares. Promoter has also given a personal guarantee. In India, most banks obtain both the pledge of the shares and the personal guarantee from the promoter. So he has much more at stake in running of the company than the minority shareholders. So today, when the resolution plan is there, one has to differentiate between the promoter equity, which is pledged. The same equity can be given to the new promoter who is coming in. So there can be various ways. So I think NCLT will have to rise to the occasion to see that minority shareholders' rights are protected, because they're also as much a capital provider as banks are.
Okay, so that's an interesting view. Sandeep, I would give you time to counter that, because it's right now 2 against 1. So would you want to respond to what Anil is saying?
Yeah. Yeah. So let me respond to Mr. Genius. No, so see, essentially the way it works in the West is it's not brought down to zero. There is an option value left in the equity shares, but they get hugely diluted because the net worth has completely eroded. So the new share is coming at a valuation which is, for example, 100 times or 500 times the value of the original share. So that's how the existing people get. It's not as if the equity vanishes. It's just that the equity gets diluted so dramatically that it's virtually worthless. And that's how it should work. There's no such, with the exception of fraud, there's no real distinction between minority shareholders and promoter shareholders. Sure. And there's, under the IBC, there's no such framework which has been created which gives, the minority shareholders a larger right compared to promoters. So I really don't see the point of this argument. I think it's very clear that the existing shareholders would get significantly diluted. They will not be written off, obviously. That's not logical.
Okay, I tell you something. We are right now in the middle of a market which is very volatile. Otherwise, I would have carried this conversation forward. But gentlemen, thanks a lot for joining us and presenting both sides of the story. For now, of course, the stock is locked on upper circuit, 20% upper circuit. There were some trades at slightly lower levels, but once again, the stock is back at upper circuit. So for now, the market wants to believe. There is a bit of a recovery in the market quite clearly, but the problem is that there are other sectors where there is some selling. I mean, the bank Nifty has recovered, even the Nifty has recovered from the low point, but it's not a significant recovery. It's not a big recovery that you're seeing. But for whatever it's worth, we are off the low point. Advanced decline still remains at about 1:5. Good time to get you the BTST calls. Buy today, sell tomorrow, of course, can be reversed as well. Ashwini and Mitesh with us for that. Ashwini, you go first. Thoughts on index and stock calls?
See, on the index, there is clear short covering. Now, that will get reflected on the index only when, some things start to move in the green. But banks are kind of exhausted on the downside. I do think they are in for a 200, 250 point pullback, which has started today, which could continue even tomorrow. And as far as stocks right now are concerned, V-Guard is a buy with a stop of 229, target of 244. Jet Airways is a buy with a stop of 745, target of 775. And Tata Steel is a sell with a stop of 660, target of 625.
All right, Mitesh, let's get your ideas as well for the last 20 minutes.
See, I still have two sell ideas. I think PVR is breaking down, so I'll take a STVT kind of call over there. Sell with a stop at about 1393. Look for targets of around 1356. And Ultratech Cement also has broken down, so it's kind of declined also a bit. Try to sell it around the 4140 mark with a stop at 4180 for targets of 4050.
Well, yeah, actually a big move in V-Guard, as Ashwini pointed out. Just see the intraday chart of that stock. It has moved to the high point right now. In fact, there are some mid caps where you're seeing a bit of a move back towards the high point. Godrej stands out, DCB Bank. So there are some stocks. Obviously, there's been selective buying that you're seeing. Dish TV, as I said, IDFC has moved to high point. Jet Airways has moved to high point. Apollo Hospitals or nearly at high point. Jubilant Foodworks. Just pull out the intraday chart of Jubilant Foodworks, and that stock as well right now is making an attempt to get back to the high point. Look at that move, 1978 on Jubilant Foodworks. But Ashwini, fairly clear that it's only a short covering bounce, right? And nothing more. You won't read too much into this.
Well, you need to have a retest or some kind of a higher low to say that. But the kind of climatic action we saw early in the morning, all day, I think given that you can be certain that maybe a short-term low is in place over the next 2 or 3 sessions, you could have relative calm. But whether the correction is over, I think that is a call that needs still some more time.
Okay, all right. By the way, Fortis Healthcare, the ticker was also alerting you. There's a big move underway. There's a 7% up move on Fortis. We'll discuss that stock in a moment. But right now, it is time for Mid-Cap Mania. It's Monday. So let's find out what's on Nigel's radar this time around. Nigel, what do you have for us?
Well, the stock that we're talking about is JNFC. You know why it came on my radar? We're looking at stocks. I put in a filter to see stocks that have corrected 10% from the top. And if they're trading at less than 10 times, they're forward multiples. And that's why, in fact, JNFC did come on my radar. If you just take a look at their EPS, for the 9 months that they've done, close to around 30 rupees. For last entire year, they did 33 rupees. And mind you, there was a big exceptional other income as well that was included. Or that was a reversal. So just keep that in mind. So this year has been really, really phenomenal. What does it do? Well, it's into chemicals. And in chemicals, TDI. That's the most important component over there. Formic acid, you have nitric acid as well. And a couple of these components, a couple of these chemicals, they're sole producers in India itself. If you take a look at fertilizers, that's the other segment. Well, they're into manufacture and they're also into trading of urea. So that's the second part of their business. But in terms of revenues, if you need to get the contribution coming up for you in the screen, well, close to around 30% comes in from the fertilizer business. And in fact, 60% comes in from the chemicals business. That's in terms of revenues. But in terms of EBIT, bulk of it or almost entire of it comes in from the chemicals business. And most of that will be coming in from their TDI business. So let's focus on TDI then. They're the sole producers of TDI in India. That's point number one. In fact, they have their plants at Bharuch as well as at Dahej. And the total capacity is nearly around 65 to around 68,000 tons. Remember, it's mainly a TDI play, so that could have its downside as well as its negative impacts, solely focused on TDI. What is TDI used for? Well, all the mattresses they're used for, pillows, if you take a look at some of your car seats, that's where in fact TDI is used. And I've spoken to some of these consumers as well. The management joined us on the channel. They were sounding very, very confident. They said capacity utilization levels have moved up. The lower TDI supply in Germany as well as China, that's what's going to help keep TDI at higher prices. And the domestic market share has now moved to around 63%. Before it was just around 45 to around 50%. So that looks rather interesting as well. It's been a turnaround story, mind you. At one point of time, they were playing close to around 1 crore in terms of interest cost on a per day basis. Just take a look at that. Now done 460 crores for the 9 months. Last year's 530 crores. But if you pull up the next slide, you'll see there's a big exceptional or a reversal that's included in the 530 crores. So net, if you want to look at the cash profit for this year, 460 plus 200 crores, that amounts to 660 crores. And here, one more quarter. So cash profit for the year will be nearly around 800 to around 900 crores. And you take a look at the debt reduction over the last few years. They've reduced debt drastically. And even in terms of interest costs on a per quarter basis, well, that in fact has come down from around 45 crores to around 22 crores. So that's very, very positive. Very quickly, what are the triggers going ahead? The prices of TDI have gone up by around 2.5 times in the last few years. I spoke to a user this morning. They said it's at around 330 rupees per kg. Well, going ahead, you're also looking at a couple of other investments that they're looking at. There's a JV with Ecoforce. Currently, they're paying money to get rid of hydrochloric acid. Well, going ahead, they'll be paid for that. So that's another positive. The Neem division, that's been growing over there. That's at around 45 crores. They're looking at scaling that up. Well, promoters have been talking about, about making this company a debt-free company. So that's going to be very, very important going ahead. And let's see whether or not they can diversify from solely focusing on TDI. Finally, shareholder pattern as well should come up for you. It's Gujarat government held. And in fact, other big investors out there. So a couple of large funds and even noted investor Dolly Khanna there for you. Back to you.
Okay, Nigel, thanks a lot for that. Standard disclaimer, this is not a stock recommendation, just some interesting observation by Nigel.